If you want to actually learn what liquidity is and how to identify it, then look no further. I will teach you exactly how to do this so that you will never have to guess again. This is the free full beginners course, part number 3. So watch part number 2 and 1 if you haven't already. It is on the channel. This is liquidity. So first off, what is liquidity? Liquidity is basically the belief that there is resting money in the form of other traders' stop losses. This is at specific levels like highs and lows. It is often believed that liquidity fuels price. So for example, the markets move to take out a liquidity pool, which means it's going its intended direction. Now, whether this is true or not, this is just a common belief. People believe the markets move based off of people's stop losses. It may not, and it may. However, this is what liquidity is. And as you can see, this arrow right here is pointing to a form of liquidity. So now that you know the basics of what liquidity is, there is something you need to know, which is the 3 main types or main forms of liquidity. So the 3 main forms of liquidity are regular highs and lows. As you can see, these are just normal highs and lows that you'll see on the price chart all the time that go up, make a pivot down, or they go down and make a pivot up. So you can see it is circled here. This is a regular high and a regular low. The second main form of liquidity are equal highs and lows. So as you can see, these highs are relatively equal. That is equal high. You can see these lows down here, they're relatively equal. So those are equal lows. And the third main form of liquidity is trendline liquidity. So as you can see, price for the buy side portion of trendline liquidity, you can see that price makes new highs, but each high is slightly lower than the previous high, and it gives a kind of diagonal line that starts going down. Now for the sell side, you can see each low is slightly higher than the previous low, and it gives a diagonal line going up. So these are the 3 main forms of liquidity: regular highs and lows, equal highs and lows, and trendline liquidity. So now that you know what liquidity is, the 3 main forms of liquidity, now we got to show you how to actually identify liquidity. And when you know what these 3 forms of liquidity are, it's very simple to identify it on an actual chart because you know what liquidity is and what it's not. So we're going to go over a few examples on an actual chart to show you guys where liquidity is. So now, already just looking at this, I can tell that there is liquidity in different areas. So you guys remember the trend line liquidity. Do we see anything that forms a trend line potentially? So I do. That is right here. So we're going to go ahead and draw this out. So we see, and we'll go ahead and actually zoom in. So you see we have this low here, we have this low here that's slightly higher than this low, and then we have this low here which is slightly higher than this low. This is trend line liquidity. You can see how price right now is going for this liquidity to potentially take it out. So that is trend line liquidity, and we'll just draw it out or write it out. This is trend line liquidity. All right. So do we see any other forms of liquidity? Well, I do. If we look up here, look at this high. Again, I'll zoom in to make it easier. If we look at this high right here, we look at this high next to it, you can see that both these highs are relatively equal. So we can see these are equal highs. And what does the price do? You see how it takes these equal highs out and then it goes further. So where does it go? It goes from these equal highs to this trend line liquidity. All right. So now we can see if we see any other forms of liquidity. Let's see. So remember, we have trendline liquidity, equal highs, and the other main form of liquidity is just regular highs and lows. So you could also be looking at this. If we look at this low here, this is obviously a low. Because why is this a low? Because price comes down and then it pivots up, right? So that is a low. So this is just, you could just call this liquidity, because objectively there is liquidity under every high or low. So this is a low. And where's another form of liquidity? Well, that's a low, and this up here is a high. So this is also potentially liquidity as well. All right, so we have liquidity under highs and lows, we have equal highs, and we have equal lows, and then we have trend line liquidity. So we already see the three main forms of liquidity right here, just in this short portion of price action. All right, so let's find some more examples. So I already see it as well. We have trend line liquidity literally right here. So we have this low, we have this low right here that's slightly under that low, and then we have this low right here that's slightly above that low. So we have 1, 2, 3 lows. So this is trend line liquidity. So as you see, it's actually a lot easier when you know what liquidity is and you know what the different forms of liquidity are. It is a lot easier to be able to identify it in real price action. And we'll do one more example. We have this low here. You see price takes this low out, and then it continues going down because then price became bearish. So this was liquidity as well, and it got taken out. So now that you know what liquidity is, the different forms of liquidity, how can you actually use this in your trading? Because if you look at enough price action, you can see, like, objectively, not all liquidity points are taken. We see up here, we have, you could consider this trend line liquidity, but it's also relatively equal highs with how close these are. But you can see price did not take these out, right? And if we look up here, we see what? We have trend line liquidity right up here, but price did not take this out. So why does price take out certain points of liquidity and then price leaves other points of liquidity and doesn't take them out? Well, that reasoning, the reason why this happens is because of market structure. All right, and I did do a course on market structure. That's the part 1 of this series. The reason price leaves certain liquidity and doesn't take it out is literally because of market structure, because market structure shows us whether price is bullish or bearish objectively. All right, so think of this like this. If price is bearish, do you think price is gonna take out liquidity to the upside? More than likely not. Price will more than likely, if it's bearish, it will take sell side liquidity. So we see here, we can see we're objectively bearish. We're breaking below a bunch of these lows. So would it really make sense for price to go up and take this liquidity up here when we're bearish? No. But what would make sense is for it to take sell side liquidity. For example, we have this low, which eventually we took, and we have trendline liquidity right here as well. So since we were bearish, it made more sense to take out liquidity to the downside. So that's basically how you can use this. You also want to pair it with obviously market structure and other concepts, and you need to know which direction you are going objectively to know which liquidity to aim for, because otherwise you can draw out all the buy side liquidity you want, but if it's bearish, it's probably not going to take that liquidity out. Vice versa, if price is bullish, you can draw out all the sell side liquidity you want, but price is probably not going to take that out because it's bullish. So that's about it on liquidity. It is very simple, very easy to understand, and I just wanted to note something right here. Actually, those aren't equal highs. But if you look here, what do we have? We have relatively equal highs here. You can see price takes this out. So I'm going to show you guys these examples one last time just so you can see them. These are the three main forms of liquidity: regular highs and lows, equal highs and equal lows, and trend line liquidity. So I hope you guys enjoyed this. Make sure to like and subscribe, and I'll probably be having a part 4 of this course coming out soon. Anyways, I'll see you on the next one.